Hello friends, we'll continue with share capital, right? Now in the last lecture, we discussed about disclosure of share capital in balance sheet, right? This balance sheet we prepare as per Schedule 3 Part 1 of Companies Act 2013. So we discussed how we are going to disclose the share capital in balance sheet. First we show authorized capital, then issued capital, and then subscribed capital. Then subscribed capital is further divided into subscribed and fully paid up and subscribed and not fully paid up. Clear? Now we are moving on to the accounting part of issue of shares. How to pass the accounting entries for issue of shares. So in this lecture, what we are going to discuss is about issue of shares. Right? Now this issue of shares can be of two types basically. First, one is private, the other one is public, right? What it means that we issue the shares privately to some group of people, to your friends, right? You want your friends to invest in the business, so you issue the shares privately to a particular group of people, right? Public means you issue the shares to the general public. Clear? So issue of shares can be private or public. Then this can be in cash or other consideration. Now, in return for issue of shares, either you will get cash or some other consideration, like some assets or something that we will discuss in detail. Clear? Now, when in cash, it can be in lump sum or it can be in installments. That means that if you are issuing a share with a face value of rupees 10, that means you have to receive rupees 10, right? Either it can be received in lump sum, that is the whole amount is received in one go. Clear? The whole amount of rupees 10, the face value rupees 10 is received in one go, or the company decides to call that money in installments. The company decides to call the face value in installments. They do not want it in one go. They say you pay us in installments, do not pay the whole face value in one go. Clear? So now, what is issue of shares? Issue of shares can be private or public. Then it can be for cash or other consideration. Then when we talk of cash, we say it can be either the whole money face value. It may be either received in lump sum or the company decides to receive it in installments. Clear, friends? This much. Now, what we are going to discuss is issue of shares for cash received in lump sum. Clear? This is what we are going to discuss. Clear? Now, before I tell you the journal entry, one small example. When you go to buy a postpaid SIM card, what they do is they fill in one application form. You sign that application form, right? That means you are applying for getting a new postpaid SIM card. And after signing that application, they ask for some deposit. That is a refundable deposit or adjustable against the bill, isn't it? You go to a shop to buy a postpaid SIM card, a new postpaid SIM card. First of all, what they will do is they will fill an application form and they will ask you to sign that application form. And against that application, they will tell you that this is your deposit amount. You deposit this amount and we will adjust this deposit amount against your bills. Clear? Exactly the same thing is happening here when we ask people to subscribe for the shares, right? We ask for application from the people. We ask people to tell us that how many shares do you want. Send us the applications in written. If we are issuing 50,000 shares, X might say that I want 5,000 shares, Y might say that I want 10,000 shares. So we want the written applications from all the people who are interested in subscribing to our shares, right? We ask for applications, and along with the applications, we say that you pay us the application money. That is the deposit money, and this money will be adjusted on allotment of shares and further. Clear? So, talking of journal entries now, remember this concept in mind, right? Application, postpaid SIM card. Okay? Now, the very first step will be you will receive the application money. You will receive applications from the people, right? So, the first will be receipt of applications and application money. Clear? What is the first step? When you issue the shares, when you are issuing shares to the public, you will ask them to give us the written applications, written signed applications along with some deposit money. What will be the journal entry? You are receiving the money. What will be the journal entry? Bank will be debited because you are receiving money. Bank account debit, and the credit account will be to share application account. Clear? The journal entry will be bank to share application account. This is the deposit money that we have received against the applications, right? We ask for applications from the people that you tell us how many shares you want, tell us in written, signed by you, right? That is the application, and along with the application, if you are interested in subscribing, along with the application, give us some money. That money then we will adjust against the further calls, right? Now, this is the receipt of applications along with application money. Now it is upon you to accept the applications or reject the applications, isn't it? It is upon the company whether they accept applications or whether they reject applications. Now if you have accepted the applications, what will be the next step? If you accept the applications, what will be the next step? Next step will be allotment of shares. You will give them the shares, right? You will allotment of shares. Now, one thing here is when we talk of lump sum, that means the whole amount we are receiving on application only. whole amount is being received with application. They say that we are interested, take the whole amount with application. This is the application, this is the whole amount we are paying. Clear? Now, when we do allotment of shares, what we do is we transfer this application money, we adjust this application money, we transfer this application money to share capital. Ultimately, what is the aim of issuing shares? We want to raise capital. Capital is shown on liability side. Capital will be credited and what will be debited? Share application money will be debited. Share application account debit to share capital. Try to read these journal entries. What is the meaning? See, first we received applications and we received the application money. In lump sum case, we received whole of money, whole of the application money, whole of money that was to be raised, right? Then on the allotment, what we do is we transfer that application money to share capital. What we are doing, basically adjusting that application money against capital. What is the net effect? If you can see the net effect, this share application money and this share application money gets cancelled. What is the journal entry? Bank to share capital. What is it? For the capital, we are bringing some money. Entry will be bank to share capital. Here, we are first bringing that money to the share application. We are asking for applications and the application money. Now on the basis that whether we accept the applications or reject the applications, we will adjust that application money to share capital. I am transferring this application money to share capital account and my share capital will increase. Right? If you can see these two things, share application gets cancelled. What is the final entry? Bank to share capital. Clear? Clear? So this is on the allotment of shares. I will say share application account debit to share capital account. In case of lump sum, the whole money will be received on application only. Make a note of this. In case of lump sum, whole money is received along with application. Clear? So in case of lump sum, whole money is received along with the application. Clear? This is issue of shares for cash in lump sum. First we receive applications, right? And along with the applications, we are receiving the application money. Journal entries, bank to share application. Then what we are doing is we are accepting the application, and on acceptance we allot shares to the people, and on allotment what we do is the money that we have received with the application, we transfer that money to share capital account. What is the net effect of these two entries? Bank to share capital. That means we have received money against the shares, that is our share capital. This money we are going to use for our business. Right? Let us do a practical problem on this. Very simple. A simple practical problem. A Limited offered to public on 1st April 2016 10,000 equity shares of rupees 10 each at par, payable along with application. That means the whole amount is payable with application. Applications were received for all the shares by 30th April 2016 and the shares were allotted on 15th May 2016. When is the application received? 30th April. And when are the shares allotted? 15th May 2016. Clear? How many shares? 10,000 equity shares of rupees 10 each. Can you pass the journal entries? First journal entry will be on 30th of April 2016. What will be the journal entry? You issued shares, you received applications, and you received application money on 30th of April 2016. What will be the journal entry? Bank account debit to share application account. Simple. What is the amount? 10,000 equity shares. 10,000 equity shares at the rate of 10 per share. Clear? So how much amount is there? 1 lakh. And it is clearly written that you have asked for the whole amount along with applications. That means you have asked for in lump sum. Right? Now, he says on 15th May 2016, the shares were allotted. For allotment, when the shares are allotted, what you do is, you transfer this share application money account to where? You transfer this account to share capital account. You transfer this amount to a share capital account. That means, yes, we have accepted your application and now your application money is being considered as our capital. Journal entry will be share application account debit to share capital account. This is 1 lakh and 1 lakh. Clear, friends? So this much is clear to you. How we issue shares, private or public. Then we can issue it for cash or consideration other than cash. If we talk of cash, the shares can be issued in lump sum or in installments. Then we started with issue of shares for cash in lump sum. Right? In this case, I told you first we will call for applications from the people, and along with the applications, I will ask them to pay the money. That is called application money. Right? Like we do it in SIM card. When we go to shop to buy a postpaid SIM card, they will first ask us to sign the application and they will ask to deposit some money. That money, they say, they will adjust it in the further bills. Similarly, on application, we ask people to pay us the money. In this case, we ask people to pay the whole money. Whatever is due, if they want to subscribe to 10,000 shares of rupees 10 each, out of the 50,000, pay 1 lakh rupees. Clear? So, entry will be bank to share application account. Clear? First of all, we will say we have received application money, and then when we accept the applications, we allot shares. This application money will be transferred to share capital account, signifying that we have accepted your applications and now your application money becomes our capital. Clear? In case of lump sum, whole money is received along with application. Clear? So this was one small question that we did. Any problem till this point? I've tried my best to clear the concept that how share application is being dealt with. Clear? Is this much clear, friends? Right? So if you have any queries, just send me an email at ksjteaching @gmail.com, right? In the next lecture, what we are going to do is the second part, that is issue of shares in cash in installments. Here what we did, we say all the money is received with applications only. We call it as lump sum. Now what we are going to do is, we are going to call that 10 rupees in installments. Right? We are going to call those 10 rupees in installments and not lump sum. Right? So this is what we'll be doing in the next lecture. For any queries, friends, please send me email. I will reply you back as soon as possible. Clear? So that's all for this lecture, friends. Thank you so much.